Hello everyone, welcome to the market snapshots for today. So as expected, Indian markets rebounded and the US markets remained volatile. Nifty closed at 24,231 and Nifty 500 at 23,512. Nasdaq was down by 0.7% at 29,213 and S&P was down by 0.8% at 7641. This is Nifty 500. The advances were 306 to declines of 194 and new highs were 8 against new lows of 492, and the breadth uh, better than the last session but for sure not improving. Above 20 EMA 237 stocks, above 50 EMA 260 stocks, and above 200 EMA 291 stocks. Like I said, the Indian market's breadth somehow has deteriorated like a slow poison, whereas the US markets have been very volatile. I mean, they fluctuate a lot. They show a lot of strength some day, the other day they just break down. The chart structure, this is Nifty 50. It's taking some time to reload, but I guess it has reclaimed its 50 EMA levels, so that's a positive. Basically, I mean, we can assume that at around 50 levels, some institutions are present which are trying to reclaim those levels. That's what I said here. The price had broken down 50 MA, but it has reclaimed. So the assumption is there is some bit of buying which is happening at around 50 MAs by institutional players. Nifty 500 EMA. Again, a better looking chart, but again, not gaining much momentum. It is not going gaining much momentum. The reason is very simple. The pocket of strengths are very, very small. There are certain portions of markets which are driving the major indexes. All these indices on their own are not doing much, but there are certain portions which are actually helping them to rise. So overall sentiments from the Indian markets perspective, both Nifty 50 and 500 have reclaimed their 50 EMA, so our bullish participation is mixed for Nifty 50 and breadth is weak, and for Nifty 500 the participation is strong and the breadth still remains weak. See, the takeaway is like I said yesterday, because dollar is falling for sure, that will help to the rise of equities. But like I said, if you are looking at the broader perspective, broader indexes, maybe you would not find much opportunities, because the strength lies with definite sectors. In Indian perspective, it is auto, basically it is healthcare, reality, some of those core factors which drive an economy. It is no more you know those new IPOs, new micro caps, small caps. This is majorly, the hard assets which drive the economy. That is where the strength is, and that is where we should be focusing, and maybe that is what will help you to yield some better results. US markets, like I have been saying, very volatile. I think yesterday the advances were above 300. Today it is gone by almost 50%, which is 160 advances to 340 declines. New highs 6 to new lows of 494, and the breadth has deteriorated significantly for for second straight session. Above 20 MA 235 stocks, above 50 MA 275 stocks, above 200 MA 350 stocks. So the thing with the US market is, I won't be surprised, if everything goes above 300. Basically above 20 MA we get more than 300 stocks, above 50 MA more than 300 stocks, because that is exactly how the US markets have been playing, very, very volatile. And the second bit is here also very much like Indian markets. The strength has not spread all across. There are sectors, there are themes wherein, which are moving, which are driving the economy, and it is very similar like the Indian markets. It is those hard assets like financials, healthcare, large cap tech. That is what is driving the US markets, and maybe that is where you should be looking for opportunities. But like I said, if you are not okay with volatility, maybe US markets can be avoided at this point of time. They will remain volatile, and the reason is very simple. The yields are rising, right? So a major chunk of liquidation is going towards the US yields. At the same time, if you might have seen, Bitcoin has shown a lot of strength in last three trading sessions. That exactly means that people have The sentiments are moving towards a little risky asset class, which means for sure equities will get their share of uh, liquidation. But the only concern will remain, it will not come as a free flow money. It will come in terms of lot of volatility. So only if you are, if you're comfortable hold, uh, dealing with the volatility, I would say, you can look for good opportunities, or else I would say just be conservative. I won't say don't trade, because for sure, I mean, what happens in such markets, all of a sudden a new breakout will happen and the markets will become all bullish, and all these stories will just find no way to stand. So that is the reason I'm saying, so if you want to trade in the US markets, and if you can deal with volatility, maybe you can just stick to some of those defensive sectors and it should be helpful. But in case if you're not comfortable with volatility and still want to participate, reduce your bet size. I mean, go down to maybe 25%, 30%, 40%, at max 50%, and that should eventually help. You will remain a participant to the market, and at the same time, if market works in your favor, you make a lot of gains. Nasdaq, like I said, not getting momentum. The reason being the chart is also has also deteriorated. At the same time, a lot of external factors, the data points not helping to the rise, and S&P is a no different story. The markets are volatile. Like I said, I won't be surprised if all of a sudden it gives you a breakout at these levels. So it's a volatile market. Just be a little cautious. And Russell 2000, similar story, no differences here too. The strength lies with certain sectors. If you can scout them, that is where the money is, that is where the liquidation is. So overall sentiments from the US market is Nasdaq. On charts, it looks bullish, but participation is weak, breadth is weak. S&P 500 bullish, participation is weak and breadth is mixed. Russell 2000 bullish, participation is weak and breadth is mixed. So like I said, if you can deal with volatility, maybe go with a 50%. If you don't want to deal with volatility, I would say you can avoid US markets for time being, because it will remain very, 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 very volatile. The the market will have to decide whether it wants to go with the bonds yield sort of asset class, or it wants to go towards the equities market. So it will remain volatile, so play your bets accordingly. So what is the global picture telling us? Yields are still rising at 4.70. Dollar is falling. Maybe that is what is fueling to the rise of equities in Indian markets. VIX at 16.01. Yeah, I'm happy that it has at least risen a bit, because markets are much more volatile than what 16.01 suggests. And Bitcoin is rising. It is rising big time. I hope you might have taken some bets here and sitting at a lot of gains. And same is the case with gold. Very, very good momentum going on with both the asset classes. So dollar, I think this is one of the major reasons because of which, equities will find, or maybe for instance, maybe Bitcoin is also because of this. It might be rising because a lot of liquidity is available in the market. It is just that I think in most cases people are not sure where to put in money. And I think at this point of time, maybe a lot of momentum or strength or buyers Bitcoin has been able to find because of falling dollar. Just look at this chart. I mean, I think it just did not give you second chance to enter. That is how it has been. But if at all you played, so that is the cost at which. So I'll tell you one thing. So I'm someone who trades Bitcoin regularly, and I'll tell you what was happening around these levels. Nowadays, you will see a lot of people will start posting, that they made huge gains on Bitcoin. But trust me, all of those people who would have made a huge, huge gain on this rally of Bitcoin, they have given at least 8, 10, 20, depending upon their time frame they trade. They would have given all their stop losses at these levels. This has not come easily. I mean, I have traded almost every day at around these levels. I have given stop losses. I have made 1:1. I have given stop losses. I have made 1:2. But this is where I really made money getting it. So people on social media will tell you that how wonderfully they trade and they are making thousands, millions of dollars, all that. But trust me, everyone who actually made money has given a lot here. So only when you participate, you will get to enjoy this rally. There was no reason this breakout has happened. Maybe this did not happen. Maybe this did not happen. Getting it? So don't be carried away with a lot of social media posts. If they are genuine traders, they have given, I'm telling you, at least minimum of 8 to 10, or maybe much more than that, stop losses here, depending upon the time frames they were trading at. And that is why they have got to enjoy this rally. So don't live in a FOMO that you missed on Bitcoin. It is just that simply if you follow an asset class, this is how markets are. They will give you a lot of opportunities, they will take away a lot of opportunities. Only when you stick to your system, when you follow your rules, keep coming back again and again, again and again, that is where the markets reward you. Bitcoin has been a good rally even for me. I mean, that is how even you should be looking at markets. Just not just because someone made money, you start chasing it tomorrow. But then if this is something which you know works well with your kind of mindset, you are okay dealing with the volatility Bitcoin possesses. Just look for opportunities. Just whatever system with which you trade, try implementing that on Bitcoin, and mostly it will work when it is meant to be. And this is gold again. It has been very good for me. I mean, doing very well on gold's trade as well. The story is no different. It is just that gold cannot be as volatile as Bitcoin, and that is the reason this momentum is little slow. But again, a futures based product, you get a lot of leverage. If at all you have traded, you would be sitting at a lot of gains at this point of time. Although this looks maybe not even 7 8%, 10% from its bottom, but again, people who were struggling at around these levels, they would have made money for sure. And that is how you should treat any asset class. You should not be married to you know any asset class or any like majorly technical analysis. This, I think, a lot of it requires your mindset. I mean, if you can just stick to something, just follow your process, come in day out and do the same stuff, markets will reward you. Markets have their own ways of punishing you, but at the same time they reward you as well, and that is the reason people keep playing these games. So overall, what I would say is, if you're comfortable with the volatility, my US markets, I think you can have an exposure of around 50%. That's the max. Indian markets will provide you a lot of opportunities, provided you are scouting the right sectors, or else you'll be chopped. Bitcoin and gold are looking very strong, very good. Look for opportunities. uh, Whatever sort of trader you are, swing, intraday, positional, there would be good opportunities. uh, don't be in a FOMO that this has run away so much, should I enter here? Don't. I mean, just look at your levels, your setup. If that comes, that is when you should be entered. Just because this has gone so much, you shouldn't be trying anything. Just imagine if it falls all back. So that is the reason I'm saying, don't chase it. Only look for a setup which helps you, and that is when try to enter into a trade. That's everything from my side. I hope you all found this useful. Thank you so much, and see you next time. Have a good one.